is there a floor under the market now? Are we going to look back on March the 23rd and say that was the bottom?
Well, Eric, I went on TV the first on the crisis on the 13th, March 13th, and I was pretty bullish. I thought, this was a fluke, this was going to pass, that the government would stimulate and probably overstimulate, and I think they're on their way to overstimulating, by the way, which means we'll have to deal with the ramifications of trillions of dollars of new quantitative easing or paper printing. And there are long-term benefits to what's taken place, which you already got lower mortgage rates for homeowners and that'll be a tax cut to the consumer. And now you have this oil price war, which is giving people a tax cut in the form of lower energy bills. So, and then on top of it, I was pretty optimistic, and people thought I was nuts about new innovations in the medical space that would either come with a cure or a way to help people with the disease. And every day I read about another drug or another condition or another way to help people that have contracted this.
So are you still as optimistic as you were then?
No. So I think no. So the answer is no. Actually, I still believe all those things are true. I don't know how to think about the trillions of dollars that will come into the economy that will have to sort of go out of the economy. And I think the slope of the recovery, I think the market may be a little ahead of itself on the slope of the recovery. I heard the prior interview, and yet the woman was right. She's from Goldman Sachs. I think the manufacturing sectors will come back. But you can look over at China. We were all encouraged by China's recovery, the fact that the factories were open. But if you look at the real economy, the restaurants, the shopping centers, the hotels in China, hotels are running 30% occupancy. So people aren't traveling. They're not going to the restaurants. They're not going to the malls. And I think it'll be slower here, depending on what happens on the medical front. And I think, obviously, if it's all clear and nobody's dying, Americans will forget fast, and the recovery will pick up steam dramatically in the third and fourth quarter. These first two quarters, or actually this quarter, will be a mess. And I think the market's just looking through it and saying it doesn't really matter much. But there are sectors of the market that have rallied so hard that they're off like 10% from their highs. And that seems inappropriate because to me, the economy's been damaged enough that we're probably not at cyclical highs or all-time highs that we were at when this started. So I think certain sectors, and I think you're seeing it right now in the stocks of like a Microsoft or even the Amazons, which are not really responding. It's the shredded stocks that were impacted precisely by this that have been recovering the hardest, like our company, which we announced twice. Our property trust, we had over $800 million of cash twice, and we still got crocked. And by the way, that's the functioning of the market mechanics today, which is it's dominated by exchange ETFs. The exchange-traded funds, and people were buying and selling all the mortgage REITs, regardless of the individual characteristics of the company. And so, the baby got swept out with the bathwater. And so some companies really had challenges. You saw companies sell billions of paper in distressed situations over weekends with bid lists. People were freaking out.
Well,
Starwood Property Trust never had that situation. We never put anything up for sale. And we never had a margin call we couldn't meet. And we were sitting on $800 million of cash. It didn't matter. They took our stock down like we were going out of business tomorrow.